Is this it? Has Bitcoin already topped out this cycle? We hit 108K in January, then 112K in May. That makes two peaks, just like in 2021. Meanwhile, under the surface, leverage is building fast. Bitcoin treasury companies are borrowing billions to stack harder, just as price momentum is fading. Is the system overextended? And zooming out, Trump and Warren just agreed on killing the debt ceiling entirely. That's bipartisan approval for infinite money. So what comes next? A brutal flush or a blow-off top fueled by endless liquidity? Today, we unpack the warning signs, the misunderstood signals, and why the truth might change your whole outlook this cycle. Let's start with the bear case that seems to be gaining traction. The double top theory. As we all know, Bitcoin hit new highs in January of 108K. Then, just a few weeks ago, we looked to be ready for the next big leg up, as we hit 112K, but we couldn't break out with force. Now, price is stalling, and we've entered what looks to be another sideways and down chop. So bears are now coming out of the woodwork saying this looks like a repeat of 2021, a soft double top before a long bleed. To help frame this idea, let's roll this clip of Saifedean Ammous, author of the Bitcoin Standard, speaking with Natalie Brunell at Bitcoin 2025 in Vegas last week.
What do you think about the corporate treasuries? Because there's so many popping up, and I'm a little worried about the next bear market because I don't think that all of them can survive, and maybe some might take on too much leverage, and that could be worrisome.
Yeah, all the leverage is building up just in time for the top and the bust. I just hope my message out there to everybody who's into this business is Bitcoin has done -70 and -80% before, and it can do it again. If your business model can't handle a -80% Bitcoin drawdown, rework your business model right now, because I think we're getting toward the very shaky ground of the top and the fall from it. Historically,
you think we're near a top?
I think so. Historically, this is usually the time when we get the top, between 1 year and 18 months after the halving.
But
historically,
we're actually underperforming the last halving cycles. Like we should be up higher in terms of the price.
Well, yeah, if you measure from the time of the halving, but the difference is that usually the bull market would have started just before the halving. But now we had a significant bull market well before the halving. So that's why it looks like we're underperforming since the halving. Since the bottom, we were up from, 15K to 109. That's not inconsiderable. 110, I think we hit is the highest, or 111, I think.
112, yeah.
112, yeah, I think 112 was the highest. So 15 to 112, that's sevenfold.
So you don't think we're going to like 200K this year?
No, we might, but I think there's a good chance we go over 200K. But I think we're getting to that point where it's going to be very volatile both ways. Likely, we're going to get to that vertical side, that vertical part of the curve where it goes up a lot.
Blow-off top
yes, the blow-off top, where it goes
really
up a lot
that.
and then it crashes. Yeah, we didn't get it last time because we had two, and then there was the China miner ban in the middle.
Yeah.
But realistically, still, it was 12 to 18 months after the halving where the top happened.
Well, what about the macro side? Don't you think there's like a big print that's incoming because there's going to be enough tremors in the financial markets and the treasury market that they're going to have to come in and liquefy, and that's going to be great for Bitcoin?
Maybe. People have been saying that for a very long time. People have been expecting that for a long time. It may happen, but ultimately I generally still fall back on my thesis that Bitcoin marches to its own drumbeat. And yes, I think the liquidity stuff matters a lot, but it matters a lot more in the short term. And I guess it matters also in terms of drawing the long-term magnitudes, probably it matters. But I think ultimately it marches to its own drumbeat.
Safe's message is clear. Historically, blow-off tops tend to happen 12 to 18 months after the halving. We're in that window now, and the market is acting strange. He also warns of the leverage that's starting to build. And if Bitcoin treasury companies aren't ready for an 80% drawdown, they likely won't survive. And he's right, the risk is real, especially now that companies are borrowing billions to buy Bitcoin, injecting debt into a system that's supposed to be about sound money. Finally, when asked about the next big print, Saifedean had his doubts, and defaulted to the idea that Bitcoin marches to its own drumbeat, and saying although it's affected by liquidity cycles, longer term it doesn't matter as much. We'll dive deeper into liquidity and money printing a bit later. So before we jump to any conclusions on whether we've topped out or not, let's look a bit deeper. Yes, price action does show some similarities to 2021. But let's look under the hood. Even though ETF flows are slowing, they're still net positive. Speculative futures volume is elevated, but not extreme. And most critically, Bitcoin is still trading above its short-term holder cost basis of around 97K. And that's important, because in 2021, when we lost that level, we crashed 50%. Right now, it's acting as support. If we lose it, that's a red flag. But until then, this market still looks structurally bullish. And let's be honest, this isn't 2021 anymore. Back then, the biggest buyers were retail traders and hedge funds. Today, they're long-only allocators, public companies, institutions. These entities aren't trading this thing. They're holding it. Swan's CIO, Ben Workman, laid this out in his interview with CNBC from Vegas last week.
Why do you think companies are betting big on Bitcoin?
I think they're recognizing the problems that are out there with the US dollar, particularly after COVID, when you saw the monetary debasement and all the inflation that was entering the markets. Corporations figured out that they needed a way to protect themselves. And in order to do that, they needed to find an asset that they could put on the balance sheet, capitalize themselves around, that had a truly fixed supply, where supply is completely inelastic to the demand. And once they recognize that Bitcoin is that perfect instrument that they can capitalize their business on, they decided that they could take that step to protect the value they've created by building good businesses all along the way. And now they're protecting the value they've created, which is driving new value to shareholders. And shareholders are starting to become very active in ensuring that the management is focused on creating value from all aspects of the business, not just the P&L.
Workman explains that these aren't short-term players. They're long only, and once they buy, it's very likely not coming back to market. And recent Bitcoin Treasury company announcements only confirm that this corporate buying will only accelerate this year. And this is what creates structural tightening. When long-term capital meets inelastic supply, the float starts to vanish, and that's when things can get explosive. And if you're managing meaningful capital in this new environment, you can't afford to get it wrong. At Swan Private, we help high net worth individuals, businesses, and family offices build long-term Bitcoin positions with full guidance and support. If you're sitting on dry powder and wondering how to deploy it in this phase of the rotation, head over to swan.com/private and schedule a free call with our team today. Bitcoin is not just for speculators anymore. It's for builders, protectors, and for those thinking generationally. Okay, let's talk about that leverage. Yes, more companies are following Saylor's playbook, issuing debt to buy Bitcoin. But as Galaxy Research points out in this chart, most of that debt doesn't mature for years. In fact, nearly $9 billion of it doesn't even come due until 2027 and beyond. So while some fear a cascading liquidation, the reality is this debt structure is long dated and manageable, for now. The bigger concern isn't debt, it's demand. The reality is we don't have a raging bull wave yet. ETF inflows are softer. Retail is cautious. Even Strategies accumulation has cooled. But here's the other side. 62% of all Bitcoin hasn't moved in over a year. That's hodl behavior we haven't seen since 2016 and 2020. Every time this has happened, the next move has been explosive. So yes, I admit, this market feels weird. The bulls are quiet, the bears are loud. But if this is a double top, it's a weak one. And more importantly, in the long run, it actually doesn't matter. Because while the market chops sideways, Congress just signed off on another $4 trillion. Donald Trump and Elizabeth Warren, two people who rarely agree, just called for the death of the debt ceiling. Think about that. Bipartisan support for infinite money. And Treasury Secretary Scott Bessent once again insists the US will never default. But as James Lavish puts it, the reality is that the US soft defaults on its debt every day through structural inflation, the perpetual debasement of the US dollar. In other words, the Treasury pays you back dollars that are worth far less than what you lent to them, a soft default. And this is why we're in Bitcoin. Fixed supply, no debt ceiling, no soft default. In a system where fiat supply keeps growing, only one asset refuses to bend. And if you want to go even deeper on these ideas, come meet members of the Swan Private team at two premier events we're proud to support. BTC Prague is coming up in June and is Europe's premier Bitcoin-only conference, gathering thinkers, builders, and leaders from around the world. For more info and tickets, visit btcprague.com. And back in the US, this September, BTC in DC is bringing Bitcoiners to the heart of Washington to help shape policy and signal strength. Visit btcindc.com for more info and tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So let's end on this. Is Bitcoin topping out? Or is the float quietly vanishing while the money printer spins faster? If you're worried, you're not alone. But zoom out. The debt is rising. The rails are buckling. And Bitcoin is the only fixed point in a world of moving targets. But I'd love to hear from you. Do you think we've hit the dreaded double top this cycle? Or are we just getting started? Leave us a comment, like the video, share it with friends, and don't forget to subscribe for more Bitcoin Signal. Thanks for watching, and remember, TikTok next block.